Oh, hi, this is Tony Sagami. Hey, I want to share a few data points about China that I found pretty darn exciting. Uh, First of all, China reported that their exports plunged by 25% in May. That's a pretty big drop on a year-over-year basis, and it still shows that there's still a lot of problems with the export business in China. Their American and European customers just aren't buying like they used to. But at the same time, there are some other really encouraging statistics I wanted you to keep in mind. Number one, their domestic fixed investments, what we would call CapEx, or capital expenditures in here, increased by 32% last month. And so what that shows is that they're building factories, roads, highways, dams, making the kind of investment that would really make you believe that things are very optimistic and growing there. At the same time, they reported that the home sales for the first 5 months of the year were up 45% compared to the same period last year. So the Chinese individuals, the consumers like you and me, are confident enough to start buying homes. Now that's sure a stark contrast was going on here in the U.S. Also, this is more anecdotal, but I thought it really was a very important data point. The CEO of Qantas Airlines, that's Australia's largest airline, said that their business to China, the freight traffic business to China, was dramatically picking up. And so that, I think, is very important, because that airline freight traffic is a pretty good early indicator. So my point is that things in China are still looking very darn good. It's the same as before, the same story. Domestic consumption is strong and growing, but the export business is very weak because of the problems here in the U.S. So I really start to think you're going to see that decoupling between the Chinese and the U.S. market. And so the advice is the same this week as it has been for quite a while. You need to overweight your Asian investments, underweight the U.S., because you want to invest where the best growth is. If you're an ETF kind of investor, you could take a look at the China Xinhua 25 index. That ETF is ticker is FXI, and that's a broad basket of kind of the Dow Jones 25 of China. My only warning on that is it is filled with state-owned enterprises, and in general, I do not want to own companies that are controlled by the communist government. There's certainly some gems in there, but that's one way to get broad, quick, instant exposure to China. I'd encourage you instead to look at a little more rifle shot approach. But a lot of people like ETFs, and if you're one of those, that's the one to take a look at. This is Tony Sagami saying goodbye.